After months of steady gains and optimism about new institutional demand, Bitcoin's price has suddenly turned lower, leaving investors wondering what went wrong. The drop isn't random. It's the result of a perfect storm of profit-taking, tightening liquidity, regulatory pressure, and fading hype. The same forces that once drove the rally are now working in reverse. 1. The end of the easy money cycle. Bitcoin thrives when liquidity is abundant and risk appetite is high. For most of the past 2 years, central banks kept money flowing to support growth, and cheap credit found its way into speculative assets like crypto. But in 2025, that environment has changed dramatically. The Federal Reserve and other major central banks have kept interest rates elevated to fight inflation. High yields on bonds and savings accounts now offer investors a safer, guaranteed return, pulling money out of risky assets like Bitcoin. As liquidity tightens globally, even small shifts in capital flows can have a big impact on digital currencies. 2. Profit-taking after the ETF hype. Bitcoin's earlier rally was fueled by excitement over the approval of several spot Bitcoin ETFs in the US, which allowed traditional investors to gain exposure to crypto for the first time. The launches sparked massive inflows and pushed Bitcoin to new highs. But once the excitement faded, institutional investors began locking in profits. That wave of profit-taking triggered a chain reaction. As large holders sold, smaller investors panicked, leading to accelerated declines. This is a familiar pattern in crypto markets. Fast climbs driven by hype, followed by sharp corrections once sentiment cools. 3. Miners are selling again. Bitcoin's recent price weakness is also tied to miner activity. As mining difficulty rises and block rewards remain fixed, many miners are under pressure to sell more of their holdings to cover operating costs. The recent halving event, which cut new Bitcoin supply in half, has reduced revenue for smaller miners. Instead of holding coins, they're liquidating reserves to stay solvent, adding consistent selling pressure to the market. 4. Rising regulatory heat. Across the world, governments are tightening oversight on digital assets. The U.S. Securities and Exchange Commission continues to pursue major crypto exchanges for compliance failures, while Europe is implementing stricter rules on stablecoins and reporting requirements. In Asia, countries like South Korea and Singapore have introduced tougher anti-money laundering standards for crypto firms. This steady stream of regulatory news has made investors cautious. Every new enforcement action or rule proposal sparks short-term fear, especially among retail traders who worry about losing access to exchanges or wallets. 5. Weakening momentum and technical signals. Technical traders are also watching Bitcoin's chart closely. After breaking below several key moving averages, the coin has entered a short-term downtrend. Momentum indicators like the RSI show fading strength, and trading volumes have declined significantly. Without new catalysts, traders expect more sideways or downward movement until a clear reversal pattern emerges. 6. Broader market anxiety. Bitcoin isn't falling in isolation, it's part of a wider pullback in risk assets. Global equity markets have wobbled under fears of slowing growth, rising geopolitical tensions, and the potential for higher for longer interest rates. When traditional markets get nervous, crypto tends to fall even faster. Investors seeking safety move into cash, gold, or government bonds, not Bitcoin. The bottom line: Bitcoin's recent decline isn't the end of the story. It's a natural correction after an overheated rally. The fundamentals of blockchain adoption and institutional interest remain, but the short-term environment is dominated by fear and tightening liquidity. If history is any guide, Bitcoin's volatility is cyclical. Big rallies are followed by deep corrections, which eventually pave the way for the next leg up. But in the near term, crypto traders should expect more turbulence as the market digests profit-taking, regulation, and global risk aversion. If you found this report helpful, hit like, subscribe to Financial Vlog for real, no-fluff market analysis, and turn on notifications so you never miss updates on crypto, stocks, and global finance.